This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, a rainy one here in Mumbai, at least once again, and that's why there is two of us here right now. Sonia will be joining us in just a bit. We're coming to you, by the way, from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel. Nigel, hi, morning.
Well, morning, Prashant. It's a rainy day. Let's hope it doesn't get too heavy out here in Mumbai. But global markets, they're in a world of their own, right? Every day we wake up to positive cues, which isn't such a bad thing, but maybe a little too positive or too optimistic, I guess so, in terms of global markets.
Well, you just got to take it as it comes, right?
Yeah.
I mean, in terms of the cues. So let's just quickly tell our viewers the setup in terms of how things are stacked up this morning. And just a word in terms of how we closed yesterday, right? Yesterday was a quiet day. After a pretty good last Friday and Monday, the market went quiet, at least on the frontline indices. There was not very much by way of action. We closed in the middle of the range in the Nifty. The Bank Nifty actually did nothing. And small caps, actually, that's the index which pulled back. I mean, actually, if you map out the small cap index amongst all other indices worldwide, actually, I think the Indian small cap space perhaps will be one of the best performing areas in the world as an asset class. That index has had an incredible run. It's down just about 1%. As I said, just took a breather. But there is no stopping the rally on Wall Street. So the Nasdaq was up once again, a strong 0.75% gain. The S&P actually was up 0.75 as well. So shouldn't ignore that. Bank earnings in the U.S. actually that is the one reason, the big driver which catalyzed the move. Post afternoon, there were strong economic data points as well. Retail sales, housing data. The Atlanta Fed GDP for estimates for the second quarter. All of that also showed that the U.S. economy itself is resilient. But the catalyst last night in the U.S. was bank earnings, which were strong. For markets here, I mean, how do you approach things? The trend is up. But within an uptrend, there could be a halt, there could be a pause, there could be some slight sideways price action or even a pullback. So that cannot be ruled out. Some consolidation cannot be ruled out. And especially, I mean, the fact is that this is a pre-expiry week. And historically, I mean, you can go back a number of years, pre-expiry, we have seen markets kind of consolidate in an uptrend and then kind of things start to pick up once again. So don't rule that out. Supports in that context and within this framework on the Nifty comes in at 19,576. We left off at almost 19,750. So that's some distance away, less than 200 points, but that's quite a bit. The upside level for the Nifty would come in at 19,900. I mean, targets. Broadly, I mean, the indication is that eventually we'll get to that 20K mount, but on the way, 19,900 is the first kind of important level to cross. Bank Nifty should defend on the downside. Banks, by the way, looked more vulnerable last week, and notwithstanding the strong pullback that we saw thanks to HDFC Bank, it's perhaps the more vulnerable of the two areas. So let's watch this space. The 61.8% retracement of the recent rise, just the last 3-day rise, stands at 45,066. And that's the level to sort of defend. That's about 1% out from where we left off yesterday. And on the upside, yesterday's high of 45,906 becomes logically the resistance which the Bank Nifty needs to take out. Nigel.
Well, Prashant, in the near term at least, these flows, they're outweighing any kind of fundamentals. There'll be plenty of points out there to call for a stall of this sort of a rally. But it seems the flows are just too strong right out there. The global cues, they're positive, but the sense you get is most of the positives are getting factored in. And maybe the global markets are getting a little bit complacent as well because we're waking up to positive cues. The Indian markets either hit a 50 or 100 points on a day-to-day basis. So it appears that, almost all the positives are getting factored in the current price. The Nifty, well, it's facing resistance at around the 46,000, Nifty Bank that is, at around the 46,000 mark odd. And that could be a bit of a hurdle in the near term. Yesterday, yes, we came off the high point of the day, but the Nifty Financial Services Index, that played out the weekly expiry, and that explained why that market, in fact, the last stick was virtually at the day's low. But the Nifty Bank, has it made a double top? See, on July 4th, we went to around that, 45,650 odd mark, and we came off those levels. Yesterday as well, we went all the way to around 45,900 odd and we came off close to around 500 points from the top. The question is, has the Nifty Bank made a double top? And if that's the case, then the near term, there'll be a lot of resistance coming in at around this 46,000 odd mark. And a couple of cautious signs. The previous day, we had the Nifty ended higher. The VIX as well. From bombed out levels, it's crawling back. Yesterday as well, the Nifty ended mildly higher. But the VIX as well did move up a little bit. Maybe it's because of the levels were so low. That's why we're seeing a bit of an increase. But sometimes this is one of the triggers to warn you about some kind of caution out there. So we're just putting that on board. The FI as well, they are showing us the big money. And on the index futures as well, they are adding long positions. Yesterday, they added close to 4,500 contracts. And they covered some shorts as well. The long positioning is at around 71% odd. Now, we've been mentioning this in the last 7-8 days or so. The cautious zone with regard to the net long positions of the FIs is when it goes to more than a lakh. Currently, we're at around 96,000 net long contracts. What's that? The long positions minus the short positions. So we are a few thousand contracts away from the cautious zone. In terms of levels, what are we looking at? Well, the Nifty, since we have the highest open interest at around the 19,600 put odd, the 19,550, 19,600 odd mark, that's the near-term support zone. Yesterday's high becomes a bit of a resistance zone. But the Nifty Bank, the resistance zone will be yesterday's high as well as the 46,000 odd mark. Remember, the highest amount of open interest is at around the 45,500 call. The premium yesterday was around 500 rupees. It was even more than 500 rupees at the day's high. So that's give you a sense this 46,000 odd mark will be a bit of a level that the bears will want to defend. Has the Nifty Bank made a double top? If that's the case, the Nifty could consolidate in the near term or pull back a couple of 100 points as well. So let's see how this goes.
All right. Well, that's the setup from all perspectives that you need to be mindful of. Let me quickly tell you what's lined up here in the first half hour of the show before we go any further. Well, markets across the globe and the flows picture. This is coming up with Cameron Brandt of VPFR Global. He's our first guest on this program. A little later, our research team will get you CNBC TV18's list of top 10 stocks for the day. At 8:30, our first market guest, Devin Chokshi of KR Chokshi, will join in with his thoughts on how things are set up, stocks and themes he'd like to bet on. Lots of earnings reactions will be in focus as well. Well, let's get you some money market views. Kunal Sudani of Sharon Bank says this morning that the U.S. retail sales and industrial production appear promising for June but failed to revive yields, that is U.S. yields. The dollar index recovered just a little bit. He says Fed bets past July will be, beyond July will be watched for a clearer sense of direction. Goes on to add the Chinese yuan will see depreciating again while Brent crude prices rebounded. For the USD INR, he says 81.9 should act as a support while 82.3 is a resistance.
Well, let's get you the bond call of the day. Then Neeraj Gambhir of Axis Bank says that the 10-year benchmark bond yield traded in a range of 7.05 to 7.12% last week. He says that India June CPI came in higher than market consensus at around 4.81%. He adds that bond yields eased, largely tracking softening U.S. Treasury yields due to lower than expected U.S. CPI and PPI data. He says that short covering in India 10-year bond further supported the easing of the yields. He expects the 10-year benchmark bond yield to trade in the range of 7 to 7.10 ahead of the FOMC meeting that's scheduled for next week.
Okay, well, we've got lots of stock-specific action coming up that we will need to track. And we'll get to it in just a bit in our special Top 10 segment. We're looking at stocks like IndusInd Bank, Federal Bank, ICICI Lombard, Himadri Specialty, CIE Automotive, Network 18 Media, TV18 Broadcast, Amara Raja Batteries, and Rallies India. These are on our radar on the back of positive news flow. On the other side, the negative side, we've got L&T Tech, which is the only one, and that's the results reaction. It's likely to open in the red on the back of it.